Hey guys, very good evening to everyone. I think we'll begin now as people come in. Again, today's session is a live analysis session. If you guys have any questions or any instruments that you guys want to go through, feel free to put it in the chat. I would try and see if we can incorporate that into today's session. Okay, so my name is Sherman, and before we begin, I just want to make sure that all of you guys here are aware that whatever materials that we'll be going through today in today's session should be in line with your own trading objectives. Do feel free to seek out additional advice if needed, and do ensure that you're aware that any form of trading of such derivatives carries risk, and you may lose all of the capital if not done correctly. Okay, today I'm not going to go through the key economic events. I think the one that's going to foreshadow the this month is the CPI data that's coming out next Tuesday and Wednesday. So I'm just going to go through the trade setups and what we can expect for the CPI data next week. Okay. So again, I'll start off with the DXY, which is basically the dollar index. The dollar index basically measure the strength of the US dollar against a basket of currencies. The key thing here is that we do not need to know the weightage or how it's being calculated, but basically it just gives us a general idea of where the dollar is heading. And if you're going to trade any dollar pairs, especially like gold against the dollar or euro dollar, it's good to know like where are we heading, and to be aware of the general direction of where the dollar is going. Okay, so I think just to reiterate what we have gone through previously, so the dollar has been on the uptrend for close to about a year, 12 months, right? All the way up to this stage where it formed its peak in September, and then now we're seeing this there's this change in character, and then it failed to hold up this long-term trend line, and now it's broken past cleanly down into this lower levels, and we are expecting a sort of like a relief or a bounce of support, but we're not quite there yet. I think just probably 1 or 2 months ago, this was that support that we were looking at, right? And it broke past, came back up, and then now we are these two lines no longer hold. This support line no longer holds, right? So we're probably going to look for the next support, which is around 103.58, and then if it breaks further, it'll be 102.08. Again, all of these points are subjective. Different people might come up with different support lines. It's up to your judgment, but personally, I think this is more of like sort of like a gauge of where that support will be like, say in the next 1 to 2 weeks, right? And again, because of that key event next week, and we're near support, so we're looking for areas of support and to buy the dollar before the event, or if the event goes according to plan, then we might see dollar strength coming in. Again, CPI, why CPI data is so relevant today is because of inflation, right? CPI is basically the calculation of inflation across months and across years, year on year and month on month. And inflation is way above the 2% rate that the Federal Reserve is comfortable with. And if inflation continues to rise, the Federal Reserve will be more aggressive in terms of rate hikes. But if CPI is stable and on a downward trend, then we might see the Fed pivot and slow down the rate, the rate of rate hikes in the coming months. Okay, so the expectation is that CPI is going to remain around 6% or lower, or it might even go lower. But anything that suggests otherwise, then we'll see dollar spiking up again. Okay, so that's basically the DXY. we have to be ready and prepared to buy the dollar if CPI shows that inflation is not slowing down and it's actually rising again. Okay. So I'm just going to go to euro dollar. So the euro dollar is in most cases inversely correlated to your DXY. So as your dollar index is going down, your euro dollar will be going upwards. Okay. So again, you will see a similar pattern, right? A long-term downtrend, right? Again, all of these lines are subjective. I'm just going to draw just for us for ease of looking at it, right? This was the long-term trend line that was that happened, that started probably in May of 2021, right? And then there was this strong downtrend. And in recent months, because of a slowing down of your inflation in the US, a lot of the traders are actually looking at a Fed pivot, which means that the Federal Reserve is not going to raise rates as aggressively. And we saw this breakout in October during the CPI announcement, and then came back to retest, and now we're on our way up. And again, I think for Vantage, we did have an analysis on euro dollar, so I'm just going to go through that. That was on December 6th, right? So again, we were looking at this resistance and this support, and then right now we want for us to actually push prices up even higher. What we want to see is a retracement back down to this channel here. Maybe I'll just draw a channel instead. Right. So potentially what we want to see for the continuation up is to actually bounce back and then we go higher. And the expectation here would be that where would be the point of indecision, right? Would be somewhere around this resistance line. So I would expect CPI data before CPI data to be let's say somewhere around here with this. So these two key levels, why I would say like these are the two key levels, would be that this is the point in which if CPI data it's lower than expected, then basically you will see euro dollar spiking up due to the fact that Fed will pivot and slow down their rate hikes. And this other line, it would be basically, given that we have about 2 or 3 more days, I would expect prices to come back down to this line, to the area of indecision. And if CPI data is good, it continues to trend up. And if CPI data is bad, basically it'll break out this trend and then hit back down to probably this area of support. Okay, so I would say these are the 2 points to watch. If you were to look at a lower time frame, just to see what's going on today, right? Again, these are the 2 points. This was the resistance, right? So this, we have not quite yet reached the top here, and I would say that this is basically the formation of an equal high, right? So expect prices pre-London, right, to maintain around here. And if the trend was to go down to a lower price for buyers to come in, I would expect some form of manipulation in form of breaking up above this resistance level and then coming back down again. And then for us to actually buy this area here, this entire area here, right, would be our area to buy, and then buy, and then it goes down again. This would be a high probability trade setup, right? For us to actually buy here and expect prices to go up, it's a little bit unrealistic, right? For us to actually buy, I would expect prices to hit down to the bottom of this channel before buyers coming in to buy it at this discounted price again. So I think for today's trade setup, it's pretty straightforward. We're just waiting for that manipulative push up above this resistance line. And again, these are all very close together, right? So we have another level here. I wouldn't be surprised if nice London, right? So I think I wouldn't be surprised if we see something like a breakout, retest, move up, and then over around this area, push up, and then come back down again. This would be a bit tough because it's another 170 pips, right? But this might be the setup for CPI, and then CPI data is higher, and then it pushes back down during CPI. Right. Otherwise, I think this is a more probable setup where we push past this resistance, come back down, retest this resistance again, and then we probably hit down to 1.045, which is roughly around 100 pips. Yeah, so this is kind of I think the idea for euro dollar today. The other one that we want to look at is the gold, XAU, USD. Very similar idea, right? We have this resistance here. We're going to form, basically what we want to see is an equal high for sellers to take up, right? So the equal high would be at this level, right? But if you extend this is basically the range here, right? So, and I think if you guys were on the previous call, we mentioned about this cascading area here. So this gold will be slightly, if you compare gold versus euro dollar, right? Because of this slope here, it's a bit worrying that if you were to break past this, this might not be the end. It might actually push up to this, at least to this level, which is 1.7. Okay, so it's a bit dangerous to actually be selling now at around this area. Probably scalps, but definitely not for swings for the CPI. Okay, so again, this will be a channel that we can actually use. And if you take a look at this, it's not really a strong channel, but I would expect if prices were to push up, it would be at least to this level, right? For some confluence, right? Before heading back down to this level. Or it might be pushing up to this level. And then if you look at where CPI data is around, I think it's Wednesday. So yeah, I think the alternative, since the blue line is here, the alternative would be on a lower time frame, right, where we see this channel happening right now. Right. So what we'll be expecting is break past this down and then up again. Yeah. But I think a more probable trade setup would be for prices to range up to this point and then come back down again and then push past this level and then we hit down. So definitely, if we were to look at a sort of like a 15 minutes, right? It'd be slightly clearer, right? We just form an equal high here. So the idea would be to break past this, come up here, and if we're lucky, you'll be coming back down here, but I would expect price to shoot up, retest, and move up higher. This would be today's trade, not so much for CPI, right? But if we were to look at the CPI data, the expectation, let's see, we can do FX. The expectation for CPI data Wednesday. It's 4.5%. So it's a 0.5% increase instead of a 0.75. Oh, sorry, this is a Fed interest rate decision. I think the CPI is from just now. It's actually tonight, yeah. No, this PPI. So next week's is the Fed interest rate decision, right? PPI as well will be market moving. So that's something for us to actually keep an eye on. But next week's event would be the interest rates decision. So if it's a 0.5% increment, right? If it's going to be a 0.5% increment, that might be bullish for equities and non-US. I mean, bullish for everything else other than the dollar. This is December 15, and then interest rate projections. Yeah, it's on Thursday, December 15. Okay, so basically we'll see we are bullish based on a 0.5% increment. I'm actually bullish on anything other than the US dollar. Right. So for us to actually reach that stage, right, we would look at DXY again. Right. We will probably want to see something. We probably want to push the dollar a little higher and then break past the support down even further, or maybe back to this support and then move up again. Okay. Do you guys have any other instruments that you guys want to look at? I'll probably just go through one more, which is basically the equities. So given that we are already aware, maybe the US 500, right? Given that it's going to be a 0.5% increase, again, prices will usually range around an area of indecision. So if it's a 4.75% interest rate, then it's going to be bullish for the dollar. Yep. So I think at this point in time, we are at this indecisive stage for equities as well. So yes, if you look at this point in time, this is somewhere in May. This is February's low. Right, we are back to February's low. Right, and then we have this downward trend line here. What I mean by indecision price would be somewhere along this line, such that the natural state of things would be to actually push price down to maintain this resistance. But if the results shows otherwise, then it's easy for us to actually get past this. So as a trader, right, if you are bullish on stocks, you wouldn't be buying here. Probably wait for it to break out, retest, and then buy on the retest. If you are, we wouldn't be even buying here. You'll be buying at this price, even though it's more expensive. But otherwise, it would probably be the continuation of this trend down to this level, and then we are trying to look for the first, at least back to this point here. Otherwise, we might see even lower prices. Again, if you look at how it coincides with this point here, right? And then this was the COVID lows, right? Probably a few support here. And again, I would say this point here, this was pre-COVID low, right? This was the peak before COVID, right? This will be a very pivotal point because that was the last high, and we have gone up so much, and right now it's almost all the companies who gain 2x, 3x, or maybe 10x from this whole COVID rush, right? They're all back down to their most basic valuations. Okay, and then this was the COVID low, which is equivalent to a 2017, 2016 high. Yeah. Okay, so I would expect there'll be a lot of support here. Now the support is around the 3.3K area, right? So definitely, if you're buying here, it's super high risk. It's at resistance and resistance in a downward trend. So buying at that point, it's very, very risky, right? So you would probably stack yourselves here. What I mean by stacking ourselves here, because this is still in a downward trend, right? Why would it be less risky to sell here, at least at this point, this level here, right? At this level here. This would be a very premium prices. So, right, you have another resistance here, which is pretty close, right? And so if you were to sell here, pushing price up to this point, which is about another 300 points, right? You can stack your sells knowing that this resistance will actually push prices back down to this point for buyers to actually push up again. So you have one entry here. If you're wrong, second entry here can actually push price here down. This is the buy setup, right? So if you're a seller, if you're wrong here, but I would say the probability of you being wrong here as a seller, it's less likely than the probability of you being a buyer at this price point. Okay, so I think that's kind of like the analysis for S&P 500. Again, this might be a point of contention, right? Which is the end of the week. If it breaks below this point, then it's even there's more confirmation for us actually to sell at this point. This is a valid order block on the daily time frame because there's one entire day that wiped out all these sellers here. Okay, so break down to this point, an order block push up, we see resistance here. You should range around this area and bring price even lower. Yep, I think that's about it for the S&P 500. Do you guys have any other questions or any instruments that you guys want to look at? Otherwise, I guess technical analysis is pretty much the same for all instruments. So I think the key thing is still risk management, right? If you're managing your risk well, then everything is pretty much the same. It's just rinse and repeat. US 100. Okay, let's take a look at US 100. Like CFDs. Okay, so I think because of all these indices are basically the same, right? They are just made up of different types of companies. So if you look at S&P 500, look at the Dow Jones, you see very similar patterns across the board. So one analysis for any particular index would be basically the same for all of them. So if you're trading all of them, then you're basically overexposing yourself. You're just increasing your risk. I think you just need to select one and pick one and trade them. So same thing again. Maybe just go through it really quickly. This is the downtrend. So when it's a downtrend, it's less risky to sell. Again, when I talk about risk, I think one key thing that I notice when people talk about risk, or when we hear other people talk about risk, we usually put it to the back of our heads and think that oh yeah, it's we can only control risk with our stop losses. That's not true. Stop loss is basically the execution, but when you talk about risk, there are a lot of controls, levers that you can actually move to control your risk. Okay, so if you have already identified a downtrend, you don't even need to be mathematical about it. You don't have to be very technical about it, right? if you identify a downtrend on a daily time frame, right? If you're buying, it's basically high risk, right? And if you're selling, then that's low risk. Coupled with sniping the entries, coupled with the execution of a good stop loss, right? You can minimize your risk by a huge amount, which also increase your probability of winning. Okay, so again, down here at this point in time, buying is high risk, right? If you want to buy, you need to identify areas where buying is low risk. So as price goes down, right, it's riskier to sell, less risky to buy. And as price moves up, it's less risky to sell and more risky to buy. Okay, so again, if you want to look at areas to buy, these are the areas where there were strong support. As compared to US 30, but I'm not going to use those at the end. You probably can use this point again. This is pre-COVID highs as a support. But again, this whole move here was manipulated by the Federal Reserve, pumping in money, buying all of the overnight swaps and stuff like that, pushing prices even higher. And so this was not based on market forces, but by an institution, a private institution, to prop up the market. Okay. So again, at this point in time, these are valid support because these are places where market buyers came in to buy and support this area. Okay. But of course, when you look at this downtrend, it's nowhere near a confluence of the lower bound. So this is still a high risk to buy. Okay, what you want to see, if possible, is something like that when it comes down to this point, touching the bottom of the channel. And as it moves up, this becomes a less risky place to buy, less risky area to buy. And that's why when it comes down to this point, you push back up. You see this bounce because buyers came in at this point in time. Okay, so again, downtrend, very similar to your US 30. We have this small channel up here. You probably for CPI, okay, at least up to not CPI, for interest rates decision. It's 15th of December, so it's soon, which is another 2 or 3 more days, right? So where will be the areas of indecision? Will be here, and then probably around here, right? So you expect price, now it's in the middle, it's also very indecisive, but prices tend to move to either of these areas, right? And then once it's being announced, if it's good, continue the trend up. If it's bad, you break past this channel and then follow the primary trend. And if at this point in time, right, if it's bad, just sell off, and then if it's good, push up, retest, and then buy again. So again, it gives a lot of hints where the prices end up before that Federal rate. And again, because it's so obvious nowadays that prices are going to end up here or here, what will actually happen, I would assume, is that prices will push past this. If let's say we were to actually create a fake out, right? I would expect prices to actually come retest the next 2 resistance. So even pre-announcement, prices will push towards these 2 levels, right? And then the announcement will get them because these are very good selling levels, right? So market might rally up to these 2 points first and then sell off. It would be very unlikely but not improbable that prices breaks below this point and then the announcement is good and it pushes back up again. This is very risky, even for hedge funds or institutions to actually sell off before the announcement. It is less risky for them to actually buy up now to prop up the market and get everyone excited, and then sell to those late buyers or the retail buyers, and then sell. That will be less risky for them, right? If they want to manipulate the market, it's more risky for them to sell now as compared to rallying the market. Okay, so I think that's kind of like the idea for US 100, US 30. If you look at US 500, this was the S&P 500. US 30, which is the Dow Jones. So Dow Jones is a little different, right? Because if you compare against the other two, it has already rallied past it has already broken past this, right? So for a very nice rally, for a good setup for rally, right? You need, what I want to see is this support holding, and if you just compare, use the Fibonacci tool to measure, right? It coincides with your 78.6, right? I mean, it doesn't exactly coincide, but it's roughly around the area. So if it comes back up here, I would expect prices to push up even higher. Yeah, so this looks like a bullish. Whenever we see such a V-shaped pattern, right? It basically means that all the sellers here were wiped out by all the buyers here due to recency. So buyers have the upper hand. And when this happens, then you know that it's good for you to actually buy the Dow Jones. Yeah. Again, this is on the daily. And you have this kind of slope here, right? This point here. Yeah, so you might even see a price action like that. For it to be bearish, right? A bearish pattern could easily be something like, so this is the sort of like some might say this is a bull flag, but this is too wide to be a bull flag, right? Too rangy and too much for sellers to come in. So again, the sell setup would be something like that. Hit a double top range and then come back down. And then the bullish pattern would be to come back down to 78.6 and price something. Or it might be bearish first, down to this level, hit up a double top, and then come back down again. Yep, so I guess that's about it for today. Hopefully this helps. And then if you guys have any questions, feel free to reach out to me by email. Otherwise, I'll see you guys again next week. All right, thank you for coming.